The falling stock mystery. Hello, friends. In the stock market, one question is asked again and again. A stock has fallen 50%, 60%, or even 80%. Should we buy it because it looks cheap? The answer is, not always. A falling stock can be a golden opportunity, or it can be a falling knife that keeps hurting investors. Today, we will understand the exact technical signals that can help us identify the right time to enter a falling stock. The biggest mistake: buying just because price fell. Many investors make one common mistake. They think, this stock was at 1,000, now it is available at 500. What a bargain! But remember, a stock falling in price does not automatically mean it is undervalued. A weak company can continue falling much further. Smart investors don't ask, how much has the stock fallen? They ask, has the fall stopped and are buyers coming back? First signal: double bottom pattern. The first powerful reversal signal is the double bottom pattern. It shows that sellers tried twice to push the stock lower, but buyers defended the same price zone. The important point is, a double bottom is confirmed only when the stock breaks above the neckline with strong volume. The pattern tells us, selling pressure is reducing, and buyers are gaining control. Second signal: moving average reversal. The second important confirmation comes from moving averages. During a downtrend, price stays below moving averages, but when the trend starts changing, we often see price moving above the 20 EMA, the 20 EMA turning upward, and eventually, the 20 EMA crossing above the 50 EMA. This indicates that short-term momentum is improving. Third signal: RSI bullish divergence. One of my favorite reversal signals is RSI divergence. Sometimes the price tells one story, but momentum tells another. Example: the stock price makes a new low, but RSI makes a higher low. This means the sellers are becoming weaker. Momentum is improving, and the possibility of a reversal increases. Fourth signal: volume confirmation. Price movement alone is incomplete. Volume reveals the hidden story. During a healthy bottom formation, selling volume usually starts decreasing. Then, when the stock breaks resistance, a sudden increase in volume shows strong buying interest. This is often where institutional investors start participating. The high probability buying formula. If I have to buy a falling stock, I would not depend on a single indicator. I would wait for a combination of signals. First, a reversal chart pattern. Second, momentum improvement through RSI. Third, price moving above important moving averages. Fourth, strong volume confirmation. When these four factors come together, the probability of a successful trade improves significantly. When not to buy a falling stock. But remember, not every fallen stock deserves your money. Avoid stocks where the company has high debt, management quality is doubtful, promoters are selling shares, business performance is continuously declining. A beautiful chart cannot save a fundamentally weak company. Smart entry strategy. Professional investors rarely put all their money at once. A smarter approach is, start with a small position after reversal confirmation. Add more after breakout confirmation. Increase exposure only after the trend becomes stronger. This protects capital and reduces emotional decisions. Weekly EMA trend reversal, the institutional signal. Friends, among all technical signals, one of the most powerful signals for positional investors is the weekly 10 EMA crossing above the 20 EMA. Why is it important? Because weekly charts represent the bigger picture. Daily charts can give many false signals, but when a weekly EMA crossover happens, it often indicates that the balance of power between sellers and buyers is changing. When the 10 EMA moves above the 20 EMA, price remains above both averages, and volume starts increasing. It suggests that momentum is shifting towards buyers. This does not mean we blindly buy immediately. A professional investor combines this signal with strong fundamentals, healthy price structure, and proper risk management. Remember, daily charts help us find entries. Weekly charts help us identify trends. A weekly 10 EMA crossing above 20 EMA is not a guarantee of success, but it can become a powerful confirmation that a new trend may be beginning. Monthly 50 EMA support, the long-term investor signal. Friends, short-term traders often focus on daily charts, but successful long-term investors always respect higher time frames. One powerful signal is a bullish candle forming near the 50-month moving average. Why is it important? Because the 50-month moving average represents a long-term trend zone where institutional investors often become interested. When a stock falls for a long period and reaches this important support, then forms a strong bullish candle, it tells us that buyers are defending this area. But remember, a single candle is not enough. The best opportunities come when the stock has strong fundamentals, the price is near long-term support, volume starts increasing, and momentum begins improving. The monthly chart shows us the bigger picture. Remember, daily charts help you trade. Weekly charts help you follow trends. Monthly charts help you build wealth. Patience near quality companies can create extraordinary opportunities. Patience creates wealth. The biggest lesson in investing is, don't buy a stock because it has fallen. Buy it when the evidence shows that the fall is over. Remember, cheap stocks can become cheaper. But quality stocks with strong reversal signals can create great opportunities. Successful investing is not about predicting the bottom. It is about waiting for confirmation. I am Mansi, and remember, patience is the biggest advantage of a successful investor. Thank you.